Joining us now to discuss the crypto markets is Henry Elder, head of Treasury and Wealth Management at wealth management firm Wave Financial. Welcome to the show, Henry. So we did see Bitcoin rise above 40,000 earlier. It seems to have fallen below that resistance level. But where do you see Bitcoin going, and what is the catalyst to this bounce that we've seen over the past couple of days?
Absolutely, Christine, and thank you so much for having me on the show. It's great to be here. So, what we're really seeing right now is regulatory season. Over the past couple of days, we saw as leverage liquidations basically cascaded upwards. The market got a little bit too bearish and saw an opportunity to wipe out the leverage shorts, which pushed us above $40,000 Bitcoin for a short amount of time. And then I think the reality of the situation that the crypto markets are facing from regulators worldwide kicked in and has caused us to sort of cap out at that $40,000 level. I think it was great that you guys had a focus on regulators today, because that's what's really driving the markets. As we see action in the US and internationally, I think a lot of people are wondering, how is this going to impact a lot of the important themes that we've seen driving the market this year? Especially when it comes to stablecoins and DeFi.
So, Henry, we noticed that Bitcoin is higher than relatively some of the other assets that are in the market, such as the alts and DeFi. And usually, when if Bitcoin is higher on an up day compared to other alts, it's a signal that something's going on. Is this a flight to safety away from the likes of stablecoins? Is that in general what you think is going on here? That basically traders are saying, hey, you know what? If I got to get my money out somehow to fiat or to whatever, I probably have a better chance doing it in Bitcoin than even some of the major stablecoins.
I think that could potentially be it. A lot of these regulatory fears are weighing on stablecoins specifically. Tether is, it's something that has been subject to quite a bit of fear, uncertainty, and doubt for years now. But I'm sure that you saw the news of rumors earlier this week that the Department of Justice was potentially shaping up to take action against Tether. So, we've actually been seeing in the markets some demand for puts against Tether and traders putting on positions that could profit in the case that Tether comes under regulatory attack and loses its peg. So in a situation like that, absolutely, Bitcoin serves as the safe haven asset for crypto markets.
Good morning, Henry. There's obviously a lot going on in the world right now, fears of COVID, resurgence. What are you seeing in terms of correlations between the cryptocurrency market and the stock market, and how are you looking at that going forward?
Yeah, Emily, that's a great question. While we were in what was affectionately called crab season, as Bitcoin sort of just moved sideways and Ethereum moved sideways, we started to see those increasing correlations between crypto and traditional capital markets. But that correlation, very much broke over the last couple of days. However, if we do find that we move back into a sort of sideways motion as traders try to figure out the impact of all of this regulatory action, I think we could start to see those correlations start to rise again.
So, Henry,
I'm wondering
one of the big themes.
Go ahead, Lawrence.
Oh. Okay. Well, one of the big themes, delays are pretty funny. One of the big themes of the previous few months, definitely in Q1, was this idea of institutional interest in Bitcoin. Has that subsided? Has it, because of the regulatory factor now with stablecoins, have institutions just said, you know what, this isn't for us, or let's just wait and see, let's hold off?
Yeah, that's the $1 trillion question, Lawrence, isn't it? I absolutely do not think that we've seen the end of institutional interest. In fact, I think that the drawdown in May that basically reset crypto prices allowed them to re-enter the market at an attractive price range. You have to remember that institutions take a longer-term view of the market than your typical crypto trader. And they're looking at this as a 5, 10, 15, 20-year investment, right? And they see the power of this technology. They recognize that the reason that we're dealing with regulators right now is because that power is being realized. It's validation of the thesis that crypto technology, blockchain technology will underpin future financial markets and far more than simply financial markets. So the reset in crypto prices allowed most of them to enter at a much more attractive price than they would have a few months back. And these are not, I think it's easy when you're operating in the crypto markets to get caught up in the sort of bear bull mindset of many of your retail and even some of the more professional traders. But when you're talking about institutional asset allocators, it's very simple, right? I mean, when they see that an asset is going up in price for a significant amount of time, the natural inclination is to believe that that asset is going to correct soon. And so Bitcoin going from $10,000 in late 2020 to $65,000 in the first quarter of 2021, that's not an asset that institutions are going to pile into at the peak. They're going to be looking at that. They're going to say, look, we've seen this kind of a thing before. We're going to wait a little bit and wait for it to connect, and then we'll jump back in. And that comes from that longer term mindset that they have. They don't need to make those returns in 60 days or 6 months. They're looking at a much longer time frame.